All right, welcome back to this week's market preview. So, as usual, we'll run through what happened last week and then we'll dive into what to expect um, in the present week. All right, so quickly looking through what happened last week. Last week, we had an ATR burst, so we're expecting a cooling, right? We're expecting that we're going to have a bit of a cool off before the continuation of the trend. That didn't happen. On Wednesday, we were actually looking to sell, and we took losses on EU and GU. That basically we had to call it a wrap for the week, and then of course created a high of the week, and then dropped from there off the CPI. So just like I mentioned last week, that I was expecting the CPI to come in slightly above expectations, which was exactly what happened. It came in slightly hotter on all fronts. But I mentioned the fact that we are going to be having jobless claims coming out at the same time with it. And usually, when we have two news events coming out like that together, what usually tends to happen most of the time is that one is usually good, the other is not so good. And then we have that whiplash that we had, right? That will see price push up to the upside, push to the downside, take out, try to take out liquidity on both sides, both buy side liquidity and sell side liquidity as well. So, but finally, we're in a position to continue trading with the trend. So we've known that USD was bullish of volume since somewhere around here, but outside this particular week, from here, we are basically looking for other models who are giving us reasons to sell. However, this week, all our models have given us the green light to align ourselves with that bullish move on the USD. So Fractal OF, of course, turned bullish right here, right? Swing short is equally bullish. Took our previous week's high and had a bullish close as well. So what do we look forward to this week? All right, so of our weekly models, that's the weekly fractal OF and the swing shot. What we'll be expecting is that we'll be waiting for a fractal low to be formed somewhere around here on H4, right? Price to come down from a fractal low, then take out that fractal low to give us a reason to buy. Given what price is currently doing, uh, I find that a bit unlikely to happen. But of course, never say never in this market. So of swing shots of the weekly fractal OF, that's basically what we are going to be waiting for. However, what I feel is more likely to happen is to have our intraday models play out. So if we go to the daily, we can see that on the daily, EU is bearish, right? We broke to the downside here, and we've been bearish ever since. If we go to H4 as well, you could see the last thing we broke was this. We broke this. That fact has been bearish since last week, where we broke this particular level, right? So what we'll be expecting is that we expect price to do a bit of pullback overnight, take out Asian high, right? So to pull back throughout Asia. Then during the European session, we expect it to come take out the Asian high and then give us a reason to sell. So I feel that is something that is more likely um, to happen than to see a situation where price goes all the way back to uh, create that fractal low and then come take it out and all. But of course, anything is still very possible uh, in this game. So one of the things people are always traders often make mistakes about is um, once they experience a couple of losses of a particular system of trading, they start looking for the next best thing, and that is an endless cycle. All right, it's an endless cycle that you just keep uh, chasing after new things, new things, new things. What you need to do is to make sure that your strategy is incorporating fundamental drivers at the root, or you are looking at structure at the root of it. So these are the two key things. So when we are talking about fundamental things, you want to be looking at the key things that the big players in the market look at, or you want to track their movements in the market. So to do that, for instance, if you are looking at bond yields and you are looking at, or you've taken out time to understand fundamental events, data releases, and all that, inflation reports, unemployment reports, listening to the various central bank uh, heads and all that to know their thinking, because at the end of the day, um, currencies will always follow what the central banks are doing. Forget whatsoever price structures is being drawn on your chart. At the end of the day, price is basically following the path of what market participants perceive or understand that central banks are likely to do in future. So the market basically price in future occurrences. That is all the market is trying to do. Is pricing in future occurrences before it happens, right? So if you are able to understand these things that are happening at the background, then it gives you a good idea of where price is likely going to go. Another way to do this that is less subjective is to track the volume in the market, which is what um, I've been able to do using the volume trend. So in fact, for those that are in the FXP, or if you go through the FXP course and you learn about the volume trend and you actually backtest it, you'll find out that you will almost always be able to tell where the market is going. All right. Of course, occasionally during those, you won't be able to always call the tops and the bottoms exactly, but 80%, 85% of the time, you will know the direction that the market is likely to go of your volume trend. Sometimes the volume trend will tell you, just like um, when the USD was going on 18th, I called it, I said the sale of the USD is coming to an end. That was right here. And you see that basically became almost the bottom of the sell that we had there. Our volume trend turned bullish right here, right? I remember June 20 something, I think either June 20 or June 19, the volume trend again turned bearish, right? And you still saw price push up a little bit, and of course, beginning to roll over. And it has been repeating itself right through, right? So that's one of the things that you actually get in the FX because anyway, enough about that. So let's look at the economic calendar so that we'll know what to do. All right, so looking through Tuesday, basically what we have is GDP unemployment rates coming in on Tuesday. Not sure we have any other. Okay, the economic sentiments from the Eurozone. Then the CPI from Canada is going to be coming in. This always has a kind of overflow effect on the USD. It's not as pronounced, but it still has a way of somehow just affecting the USD given the closeness of the two economies. And then, of course, you have the New York Empire States Manufacturing Index. On Wednesday, inflation data from the UK is going to be coming in, and then ECB president is going to speak. I don't think anything she's going to say is going to move the market because she's going to figure out her words a bit carefully, given that there is ECB rate decision and press conference the following day. So I think she won't want to preempt that. Um, but she never can say. So Thursday we have CPI coming in from the Eurozone. This is almost always in line with forecasts. So really a market moving event. Then we have what I feel will be one of the key things to watch out for the week, which will be the ECB interest rates decision. So are they going to cut again? We watch to see if they will cut again or whether they will decide to hold. I really don't have any opinion on that. All right. So jobless claims. I personally feel that jobless claims for the next 2 weeks will likely be coming in lower than forecast, given the um, two hurricanes that US has experienced over the last couple of weeks, right? So it's going to put some pressure on these jobless numbers, right? Again, it's going to be coming in sandwiched with retail sales and the ECB release and the press conference. So it's going to be a really volatile um, period in the markets. I really wish we get a trade that we are well on our way before that news event happens, because some of the firms we work with, I mean prop firms, have a way of maximizing those news events to create a whole lot of negative slippage. Slippage is always never positive. I was entirely shocked that even on FTMO, I had an 11 pips slippage on GU last week, which was really crazy, right? All right, but it's what it is. So if we go down on Friday we have basically retail sales coming in from GP. So every day we really have some news events, which is good, so that when we get into moves, we're able to move real quickly on the moves that we want. All right, so that is it basically. There are some things that I'm seeing in our volume. I might, if I see it playing out during the week, I might just make a comment under the video. For those who are in the FXP, of course, they are going to get front seat. They always have front seat to my commentaries on intra-week commentaries and all that. Um, the I've mentioned before that this is what I use as my risk barometer, and this has turned bearish, right? So we're basically in a sort of a risk-off um, environment at the moment. We're in a risk-off environment at the moment. Um, so I expect that very soon. It's not showing very well in stocks, but I expect that very soon it's still going to translate, and we'll see how that pans out. Again, it's election year, so many other things are interplaying, because of course there is that statistics that have been around since the S&P was created, that in an election year, if the 3 months preceding the election is bullish, right? If the totality of those 3 months are bullish, then the incumbent party always wins. So as it currently stands, it basically means that Democrats are going to win the election. But that is what the statistics say. Please don't come and crucify me being a Trump supporter. I don't involve myself really in politics like that. So I feel it's a losing game all around. All right, so that's basically what to expect in the markets for this week. We are bullish on the dollar, and we'll see how that basically pans out. So enjoy the rest of your week.